How are you, fam? This is Adam from Sigmabasis, and in this video we are going to look at futures data and the market aggregator, and we're going to see how we can interpret this data in order to get the hidden edge in the leverage market. Before I do that, let me just quickly check if it's recording properly. Yes, it is. Alright. So the first thing that I'm going to explain to you is open interest. Now, if you go to this link, I'll provide the link in the description of this video. Here we have a bunch of information about the derivative market. One is the open interest, then we have the open interest change, the share of the open interest, funding, and previous day funding. What we're really interested in knowing, only this data, the open interest and the funding, and the open interest change compared to and the previous day's funding. All right, let's go through each of them. So what is the open interest? It is what it says, open interest. Now, how many traders are willing to open a position? That's it. But in which market? Not in the spot market. So you see, my friend, there are two markets. One is the spot market, which is directly related to the real price of Bitcoin. The other is a derivatives market, where exchanges create leverage tokens, or you can say them leverage tokens, based on the price of the spot pair. So open interest is basically how many traders are willing to open a position. Right, and if the open interest is rising in a bullish market, it means that we are in a very strong trend. And if the open interest is decreasing in a declining market, or when the price is going down, it means that we are in a bearish trend. Let's see. Give me one sec. Okay. So what happens if the open interest is when the price is increasing, however the open interest is not increasing? How we can interpret this data? Okay. So let's say the price is increasing, but the open interest is not increasing. Instead, the open interest was decreasing. So look at this example right here. So price was increasing, right? The open interest was slowly declining. The price wasn't rising with the open interest, which means that the market makers are trying to set a sell trap. Or it could interpret as this: as the price was rising, the open interest was decreasing because the market makers are closing their position and opening short position. Closing the long positions and opening the short positions. And if there are a lot of short positions open, the open interest will decline. So in a rising market, the open interest declines mainly because a lot of market makers are closing their positions, their long entries. So when the price is declining, and the open interest is also declining, we mean that we're in a strong bearish trend and nothing has changed. And every move that goes up, if the open interest doesn't increase with the price, we would know that the move was fake. It's just a retracement. The bottom hasn't been formed yet. In this case, the bottom wasn't formed here. The bottom isn't formed here as well. What other thing that I want to say? All right. So, when the price is increasing and the open interest is declining, it could also mean that the market is imbalanced. In an imbalanced market, there are a lot of liquidity to be taken from the bottom or from the top. And the price will basically rinse and repeat this until it flip-flops and confuses the retail traders and go in the direction of least resistance. let's look at another thing. So let's go to futures data and click on global charts. So once you're here, what you can see is an aggregation of all the cryptocurrencies out there and their open interest over 1 year. During November 21, when the price was increasing, there was a last move which was absolutely fake. We know it because the open interest was increasing at a rapid pace and there was a divergence forming against the price. And what happened after November 21? The price kept going down. Here you can check the open interest for all the coins and their respective volume. You can click on other coins that you want to see, like XRP, Ethereum, and ADA or Solana, and check their open interest. The second thing that I want to talk about is basically funding. So there are two things to take away for funding. So funding can either be above zero, which is positive and green, and funding can be negative. Now, a lot of the LURBs in crypto who are just purely influencers and sways the retail traders into buying into their bags, they often talk about, oh, funding is declining, funding is negative, time to go long. Oh, funding is positive, time to go short. This is not how it works. When the funding is negative in a bearish market, it actually means that market is correlating, that there are a lot of, it's sellers dominant, it's bearish dominant. So nothing has changed, the bias hasn't shifted. If the price was declining and the funding was green, which is inversely proportional to one another, always think about this. So if the price is inversely proportional with funding or open interest, it means that we are slowly and gradually forming a bottom and the price might go up or down. It's like, absolutely hate these influences. They're fucking total LURPs, disgusting behaviors from them. Now, let me show you example of funding. I cannot show you funding example of funding here. So what I have to do, I have to pull up the Bitcoin chart. It shows you the open interest, and it also, in here, I think you can actually get an indicator which tells you about funding. Yeah, so aggregated funding rate, you can see that the funding is negative, but what is happening right now, that the funding is actually slowly and gradually going up. If in this trend, if the funding all of a sudden turns green, we have a bearish trend, right? So there's a possibility that the Bitcoin is forming a bottom at this price range. Look at this. Price was going up, right? The funding was green. Then slowly and gradually, what happened? This basically all the players, like, this was a like positive correlation. This was a strong bullish market, but you wouldn't get an edge here just by looking at the funding, that because there's no divergence, you wouldn't be able to catch this move at all. So funding in general doesn't give you much of an edge in trading. The way you can use it is to identify if it's a strong bullish trend or not. So most of the times in when the funding is negative, what's happening is basically those people who have bought longs here, they're covering their longs, and these people who are going to long here, okay, at some point they will be covering their short and the funding will be negative again. So this is long covering, this is short covering. You can think of it that way. That's about it for funding. You can use open interest in general. in order to spot the divergences, the CVD bars can give you a very good indication of how the open interest is working, and it works around 80% of the time. If you look back, you can see it again and again. It's a better form of divergence than most others. You can look here that the price was rising, right? The open interest was rising, that the price was declining, and we got an inverse proportion to one another, price versus funding, price versus open interest. And what happens? Boom, we go up. Now, in the next step, I'm going to show you how to basically set up the aggregator v3. What you need to do, you need to go here, click on this menu button. All right, you'll get a default aggregator by default. We're not interested in that. What you're going to do, you're going to go to settings, and in the settings you're going to go to new template and upload template. Basically, I already uploaded it, so it's basically a template that I created for you guys. It took a long time. Actually, it didn't take a long time, it took around 3 hours, but it was worth it. So you can click here and then basically import this template, and it's going to give you something like this. And in here we have few key data that we are looking at. One of them is basically, this is the cumulative volume delta of multiple time frames starting from 30 to 5 minutes. This one is basically the order book, the orders, the open orders that are coming into the market from different exchanges. So I have separated into two parts. One of them is basically, this is the aggregated open orders from all exchanges, all the spot orders and all the perpetual orders. And this one are split into different time zones. Basically, this is the FTX and the US, basically Deribit, DYDX and other stuff. And here we have the Binance, Huobi, and other Asian exchanges, Kraken as well. Not Kraken, I think it was Poloniex. And we have the BitMEX and we have the Bybit. Okay, so Bybit traders are one of the worst traders. So if you follow their order book, you'll always miss out on big opportunities. So if only FTX, Binance, and Binance are selling and BitMEX is selling, you should only look at Bybit, which means that basically the price is following in the direction of the dominant traders, who are these traders. Then we have here is basically the 1 hour delta volume and the trades that are taken. If there's a declining volume and in declining volume in a rising market, we know that the price has come to an end and it's time for to look for short. And this is where you will see all the liquidations data. So once you form a liquidation, you can actually go to the liquidation spike to actually see where the liquidation has occurred, and you can mark that zone, and from that zone you can know like the price has taken the liquidity of the above traders and it's now time to go up or down. Okay, let's see one by one how to use each of them. So how to use these cumulative volume delta. If you look here from the top to the bottom, from the bottom to the top, what you can see that the delta is negative. Delta is negative, which is telling us that the price is in a bearish trend. There's a strong bearish pressure across all time frames. Now, if you open a short position right here, as long as the delta remains negative across all time frames, or at least say the higher time frames, you can remain in the trend and be comfortable. You don't have to flip-flop a lot. And the way to use this order book data is to look for big orders, big chunks of orders, like 1.1 million short orders. Then we have around 1.3 million order from short order from Binance. And taking all the data into consideration, you can like form a bias. No, okay, so this means that we might be retracing a bit, or we might be going down from at this point. Let's look at the CVDs. So it comes out spot CVD, future CVD, and perpetual CVDs. So what are CVDs? CVD is basically the net buying and selling volume that's going on across the exchanges, especially in the derivatives exchange, futures and perpetuals. One thing that will give you the hidden edge in understanding the CVDs is basically the difference and the divergence between the spot and the future CVD. So this is the spot, this is the future, right? If you observe what is happening at the top when Bitcoin is about to drop, you can see that as the price is increasing, futures was also increasing. At certain point, what happened that once the price, I'll show you with the screenshot, is the spot CVD, the spot buying was going. So basically people were buying spot, but in the futures market people were shorting. So what it created is an imbalance in the market. And when there's a huge imbalance, maybe this was a huge imbalance between the spot and the derivative market. Since there was a huge imbalance, what happened next is price went down all the way to Monday lows. So you have to look for the differences or the imbalances between the spot CVD, the future CVD, and perpetual CVD. So perpetual and the futures will work the same way, but basically in a rising market, we would like to see direct correlation between them in order for trend to be our friend. Otherwise, there's a huge possibility that it's just a trap. If you look here, we have the spot CVD. At this point, all of a sudden, there's a huge spike in spot CVD, which means a lot of spot buyers were buying. And if you look at the future CVD, what it was happening, it was forming a bottom. There was a divergence. There was a difference between them. So it caused an imbalance, and what happened next? The price shoot all the way up. So you have to look for these divergences. You have to find them. You have to train your eyes in order to look for them. The other one is basically short and long liquidations. So the way to use it, we all know what liquidation is. If you're in the futures market, if you have if you liquidated your account in a day or two, you'll know what it means. In this example, we have a huge spike. Look at this. At this point, a lot of shorts got liquidated. At this point in time, a lot of longs got liquidated. So when the longs got liquidated and there was a huge spike formed, so market makers has already taken the liquidity from the longs. What it means that price will now retrace back into the next zone, which is to take the liquidity from below, which is basically people who have set their stop losses below here. And there was another spike. So what happened next? We have a lot of short liquidations. So always look for this spike. So we have a lot of short liquidation, which means that the price has now formed the bottom. It's going to go up one liquidity to another. This is how you're going to use it. And then there is the delta. The delta is the same as this one, but it's in a oscillator form. Basically it prints the positive grid candle up and the negative red candles down. And when you also need to look for delta divergences, let's say at this point, let me show you with a screenshot so it's better. So price is going up, right? What happened to delta from this point? We formed a divergence. Now we formed a divergence here as well. So from this, taking this data into consideration, you can be comfortable taking your longs that, yeah, I was right about the market. So that's all about it. I think I covered all the topics. If you have any questions, just send it through Discord. And if you like the video, give a thumbs up. I'm not sure if I was coherent enough for you to understand the video, because I'm just sleep deprived for 22 hours now. Hopefully in the next video I'm going to start live trading, which is from 14th, so stay tuned. Cheers and happy Sigma trading.